You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 3/15/21, and, well, markets seem to be in a bit undefined territory, but perhaps they're going higher. What are your thoughts? Why don't you send us an email to kl@kerrylutz.com. Right now, we've got Avi Gilbert with us, ElliottTrader.net, and it's been a little while since we last spoke, Avi, but a lot's been going on, and you've been calling for higher markets pretty much nonstop here.
Yeah, I mean, the rally has been quite incredible off the March 2020 lows, and the pullbacks have been so incredibly shallow. I'm looking for one more pullback generally over the next. I mean, I think we're going to be trading in a range so basically over the next couple of weeks. But I think we're setting up for quite a month of April. As long as the market does not, let's just say the market is setting up for quite an April. I think we're setting up for our next run to about 43 to 4,400, and it would not shock me to see 4,600 before we complete 2021 with an outside shot of as high as 4,900, believe it or not.
So what do you attribute the run up to? How can this be happening?
Well, I think what the crash in March did is that it reset sentiment to such a bearish position that it just provided us with this slingshot that is still powering us much higher, with much higher likely still to go. So I think sentiment really is not quite as bullish as many people really believe out there. And there's so much money that's still yet to come into the market. I think we're going much, much higher.
Wow. Who could believe this? Isn't it kind of remarkable? It's totally counterintuitive, isn't it?
It is, but that's generally how markets work. It's a shame because it puts so many people on the wrong side of the market, and it's quite painful to those who try to rationalize with the market. I always say, the market is not an environment for reason. The market is a very emotional environment, and trying to reason within an emotional environment is like trying to reason with your spouse when they're emotional. I mean, how well does that work?
Okay, well, we need to stay away from comments that are going to make the few female FSN members out there feel uncomfortable. But men,
right. Who said it has to be one of your female members? Male members can be just as emotional at times, and then I feel bad for their female partners.
Yeah, we're all emotional beings, but women in particular. And
I am not touching that comment.
Yeah, but when was the last time any of you out there ever won an argument with your spouse? When was the last time you ever won an argument with the stock market?
Exactly.
So, but you're not just basing this on your intuition or contrarianism. You've got charts and cycles to back it up.
Yeah, I mean, back in 2017, as we were entering, the last phase of that rally where we topped out at the end of the year and into early 2018, we set a target for a very large degree correction that we thought the market could come back to around 2,200 before it begins its rally to 4,000 plus. And as we now know, the low that we struck back in March was 2,192. So our long-term target was off by about 8 points. And now we're sitting just below 4,000 with strong potential to be heading as high as 6,000 by 2023. So, it's been playing out rather accurately through the years.
Yeah. Yep, it has. So you attribute all of this to Elliott Wave Theory?
Well, Elliott Wave Theory, all it does is track human psychology and market sentiment. Elliott many years ago determined that psychology of the human nature in mass follows a general structure. With a 5-wave rally, 3-wave pullback, so on and so forth. And that structure really has been guiding us incredibly well through the years. I mean, if you remember back in 2015, as we were topping out at the end of the year, then too, the Fed was starting to taper and everybody was looking for the big crash. And we were saying, bull market ain't done by a long shot. I mean, we thought we would drop down to maybe about 1,800 from the 2,100 point at that time, and that would set off a global melt up where our targets were 2,600 plus from the 1,800 region before we saw our next bigger correction. So, I mean, this is really the one thing that Elliott Wave does is it provides context to the market in the way that I've seen no other analysis methodology can do. And that really is one of the biggest strengths of Elliott Wave analysis.
Interesting. So it really is just a barometer of human emotion, and these patterns keep emerging and reemerging. So what about other ways, like looking for undervalued stocks or fundamentals or momentum playing?
Absolutely. Back in October, November, we were telling all our members that, I mean, for the first time in many, many years, I went overweight the energy complex because the setup there was just so, it was something we couldn't ignore. It was one of those setups that you don't see very often. It was an extraordinarily bullish setup. And as we see where we are in the energy market today, it has been phenomenal. Those stocks have done incredibly well through this run. And so it really, any stock that has mass sentiment displayed in it can be analyzed through this methodology. But I would say that, if you're looking at a smaller cap stock, like a small biotech or something, fundamentals are probably going to be the primary driver there. But if you're dealing with, one of the major stocks in the market, sentiment is a very key factor into how it moves.
So sentiment kind of trumps all of that stuff, depending upon where you're at in the market.
Pretty much. I mean, that's why so often we'll see, stocks sell off on some good earnings report, or just the opposite on bad earnings reports, they take off. So, I mean, it's really the one constant that explains market movement in the most consistent fashion that I've ever seen.
Interesting. And obviously you've been successful at it and read your work over the years, and you kind of have an uncanny talent for going against the groove here and going against what common, I guess the consensus would have you believe.
Don't just survive, thrive. The Financial Survival Network.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, the trick about it is, there are times where everybody is pretty much going to be on the same side. And we look at that as being the heart of the third wave. When Elliott I outlined his 5-wave structure. It's when you get to the middle of the third wave, everybody is going to be bullish at that time. And you get these small pullbacks to reset sentiment a little bit. But generally, within the third wave, everybody is pretty much aligned. It's really at the major turns that it provides significant value. For example, the top in 2018, the top in March of 2020, the bottom in March of 2020. We had some really phenomenal major turning points in the last couple of years, and this methodology has far surpassed anything I've seen of late.
All right. Well, so looking ahead at sectors, what sectors do you see as being ready to move here?
Well, we think the energy sector is probably going to take a bit of a rest. Technology should start catching up, but I got to tell you, I'm looking at the Russell, for example. I mean, that still has so much upside left. I'm looking towards a point where the S&P will start catching up to the Russell, but I'm not seeing that set up just yet. I still see some tremendous opportunity for the Russell over the next several months. Maybe after that point, we'll start seeing some rotation out of the Russell, more so into the S&P. But I think both are going to do quite well for 2021 going forward.
And it was kind of interesting because the Russell took leadership towards the end of last year, the fourth quarter, and everyone was surprised by it, and nobody was anticipating it. It kind of went parabolic. I think it was up 40% for the year, and it's continued its leadership and ascendancy in 2021.
Well, oddly enough, we were actually, the IWM was actually my vehicle of choice at the bottom in 2020, in March 2020. We jokingly call it Secretariat in our trading room. The reason being, where Secretariat was known from coming behind in a lot of the races, we were looking at the IWM during this last segment of the bull market that we're foreseeing over these couple of years. We saw the strong potential of the IWM will then become the Secretariat of the market, and to date, it was probably one of the better calls we've had, along with the energy complex.
Interesting. So, precious metals, any movement there?
Yeah, we are looking for a big time bottoming coming up. There's some indications in gold. If we get a follow through on a small degree setup that we have in place right now, we get follow through over the next week or two, then that's going to confirm for us a major bottom has been struck, and 2021 could be a phenomenal year for the metals and mining charts as well.
Which is interesting because you would think that they wouldn't move in the same direction as the stock market.
Oddly enough, if you look through history, there have been many periods of history where both have moved together. There have been times in history where they've moved opposite. So I really don't buy into the old saying that, the metals are the place to be when the stock market, goes through volatile period. I don't believe that's the case. History does not support that, even though it really is the common expectation. When you study market history, really does not support that. And there have been many times where we've seen some major moves on both. For example, early 2016, we were calling for a global melt up. Emerging markets in the U.S. markets and in the metals. And boy, 2016 did not disappoint in the start of that year. We're seeing a fairly similar setup right now where everything can be rallying together.
All right. Well, that's really interesting. And finally, interest rates. What impact, if anything, are rising rates, which seems to be the consensus and could very well be wrong, because the consensus usually is, but rising rates, is that going to continue, and is it going to have an effect?
I think rates have some room to rise, but I think you're going to start seeing some bounces in some bonds. I'm not a big fan of bonds for the last year. The last time I went into bonds was in November of 2018 for the rally we had up until the recent top last year. I have no desire to be in bonds at this point in time. In fact, once this long-term rally completes, my guesstimate, like I said, is around 2023 in the 6,000 region on the S&P 500. Once that completes, I'm seeing some strong indications of what I'm considering a rising yield deflation. Meaning it's something we're most people really are not prepared for. It's something that we saw in Europe back in 2010, but I think that was just a glimpse of what I'm expecting in the U.S. Whereas I'm seeing bonds getting trashed, rates rising, but also seeing tremendous deflationary pressures throughout the U.S. markets.
All right. Well, that's interesting. So deflationary pressures are gonna rule the day, huh?
Like I said, once we finish this rally, I see potential for a really long-term bear market. There's potential that it will make 2008 and 2009 look like child's play.
I keep hearing that, and everybody's saying it, and it hasn't happened yet. But I guess eventually all booms end with a bust, right?
Correct. There's no question about it. I haven't said it because I've only been looking for us to rally all the way up to that 6,000 region before I was considering it. So, we're starting to get to the point where I'm going to start expecting it. But up until now, I've been quite bullish for many years.
All right. I think that's all we need to know. So just tell us where to find you and how to subscribe.
Great. The name of the site is ElliottWaveTrader.net. 2 L's, 2 T's. We have 18 analysts covering most of the world at this point in time. So, and all different types of methodologies in addition to our Elliott Wave analysis. All
right. Hey, and if you got a question for Avi, we'll be happy to forward it off to him. Just send us an email to kl@kerrylutz.com. Don't forget, go to our site, financialsurvivalnetwork.com. Sign up for our free newsletter. Avi, always a pleasure. Really thought-provoking, interesting words you've provided us with. And we're going to sit back and see if they survive the test of time, which, based on your prior record, there's a good chance they will. But we will be talking to you again very shortly. Thanks so much.
Thank you so much for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.